Good morning and welcome to the 189th episode of Talking Bull. I'm Ian Coleman and I'm joined today by my colleague and friend Steve O'Hare. Good morning, Steve.
Good morning, all. How are you? How are you, Ian?
Hot.
You're a bit hot, aren't you? A bit hot under the colour.
Bit sweaty. Yeah, just saying off air just a second ago, we had a monumental thunderstorm last night. Thunder, lightning, it's rain. And then woke up this morning thinking it would be nice and cool, and it's hotter than hell. So
Yeah, maybe it was God getting out of his gold position.
oh, maybe.
Think.
Yes, I think that's got to be the subject this morning. We've seen a 10% drop, haven't we, from
Yeah,
or 10.2%, which is silver's even worse supposedly. I've not had a look at the silver chart.
yeah. I mean, silver was a little bit has done a little bit better over the recent weeks. So yeah, that had a bit more of a correction.
What
All
time
those
frame's
bouncing
that
back
one
at the
on the right and bottom right? Is that a weekly?
Yeah, that's the weekly chart.
That could be an interesting candle if it closes low.
Yeah, I mean, I've just got a feeling it'll sort of this reaction low is obviously a bit of an overreaction through this swing low, stops flushed out, and look, we're sort of back up this morning. You know, if you think about it, we've had a 10% rally out from the lows.
Yeah,
It's sort of weird and wonderful. I mean, obviously we've got it has been a bit of a parabolic move for the silver.
yeah. I mean, I was looking for reasons, and anything that Bloomberg could come out with. I mean, they keep on talking about yield, and then they've not sort of said, well, US yield reverse or anything like that this morning, and they've just turned. What was? Can't remember what he was going on about. I think it was all to do with risk appetite. He's back on, and Trump's talking about tax cuts, but does that warrant a 10% move to the downside? I don't know.
It's funny, just this morning, I see Shanghai Gold Exchange has raised the gold and silver margins and the price limit. So I don't think I didn't see anything like that from yesterday, but it's just that obviously due to the sort of increase in the volatility over the last sort of 24 hours. But obviously it's not down to the dollar because the dollar's still down here.
Yeah.
So it's not a dollar thing.
No.
But I think it's just a little bit of more book squaring and sort
running
of
away.
And sort of people looking at $2,000, and maybe there's a few retail, traders getting a bit long around $2,000, and you get the flush out and the it's whatever. It's come back, but I'll still be buying dips. On a more medium term basis. Short term, obviously looking to sell into this little into any little rallies until it does turn again. But it's going to be pretty difficult to analyze from an intraday perspective for a few days.
Yeah,
to say the least.
I mean, I was looking at it this morning. Let's just share my screen. And I know it's hindsight and all that malarkey, and it was clearly broken and blah 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 blah. So I mean, you can look here. It's up $25 this morning, 1.3% already on this correction. But I keep on sort of drifting back to this chart here, and this 261.8% fib. I mean, I think if we see a doji this week, I don't know if I'd be a little bit wary because I am turning into a bit of a dollar bull as well. Looking for a turnaround in there. I mean, the weekly chart, that's a trend line. Sorry, weekly chart trend line resistance, but it clearly broke it. But you're going to probably get a bearish engulfing on the weekly.
Yeah.
The daily, that nice outside bar that you mentioned, and these really good chart formations. These you see one at the bottom here. So what happens is basically the market tries to push to new lows, or does push to new lows, but then sentiment completely reverses and it fully engulfs the previous candle. Sometimes if you get really powerful ones, they sort of take out 2 or 3 days before. And then I've just looked at this. I mean, we've got some bespoke support at 1822. I was wondering whether or not we were just going to get a fifth wave down to there. So, as far as elliott waves concerned, 1, 2, 3, 4, and then down to 5. But it looks if that dollar's turning, that this might just correct higher. I mean, that's obviously a prime resistance level there, I suppose, today. But sort of just going back to that, or back to the dollar index, we talked about this yesterday. Let's drop it down the time frame. We talked about this 261.8% fib extension being here and the swing high here. And we said that, possibility of dips being bought or rallies being sold, and that's exactly what's happening at the moment. And I've not been in the trade for 2 days, but so I think this is going to continue to be quite choppy. And I think the same rhetoric or the same stance holds, get up to 94, the figure in today's trading probably, and it's worth looking at shorts. And if you get down to sort of 93, the figure, it's probably worth looking at longs. And getting back to sort of these majors, they're all at key levels like we've been saying for a while, but we just can't get decent turns. I mean, this is a 61.8% fib in euro dollar from that quite aggressive move to the downside. Been quite a substantial rally, to be fair, and it's been pretty impulsive. So I suppose, intraday traders and all the rest of it will still be buying dips in this. So we'll go into the daily chart. Is this a fifth wave from that last move to the upside? You've got a fib here, 119.75. Bearish outside candle there, doji style candle there. But then this dip's been bought into. And in our morning report, we noted that we've got some bespoke support located at 117.19, and we made it at 117.11 low. But I still think this is the call for sort of a medium-term outlook, is a potential head and shoulders. So obviously moving up, left shoulder, right shoulder, head, and then right shoulder, because the risk reward, if you get a move up to here, this sort of zone, 118.80, 119, the figure, you only got to get a tiny stop. And if this plays out, then the measured move target is all the way down here at 115.15. And again, it's a bit the other way round in cable. I mean, again, sort of just consolidation. It's at a fib. We haven't got a 261.8, sorry, an ABCD formation until 113.07. If you go to this time frame again, this is just a mess, isn't it?
Yeah.
It's just, you put an RSI on there, relative strength index, it's just going to be flatlining, highlighting that we're just non-trending at the moment. But what I did like here, as opposed to sort of the cable, the euro dollar call, was that we've got our bespoke support here, 129.81. We've got a swing low at 129.81. So an ABCD correction would take us there. So sort of buying in this sort of zone for a move up to potential right shoulder. So what I'm trying to say is, I think at the moment you can play it either way, but you've just got to be careful with your timing, I think, with regards to the dollar.
There's a lot. There's a lot of noise out there, and the volatility is obviously spiked up. What's that?
And we're in prime holiday zone, aren't we? Not that anybody's going anywhere, but
well, this is it, and I think this has led to the increase in volatility. You had we spoke about it a couple of weeks ago, where all the bank fund managers all shut up shop. They sort of like flattened their books, and they thought, right, okay, that's been a tough old slog for the last sort of 7 months. Let's take the August off and then come back in September. And I think maybe there's a that's why you see maybe that increase in volatility. It's funny, the equity markets, if you sort of like think about them, if you think about them on the sort of, I mean, here we've got, so I'm looking at weekly charts, so these are the more medium to longer term charts, and this is FTSE. I mean, if you weren't to look in the top left hand corner, you would sort of think they're completely different assets. This is like DAX pushing towards its new high. This is Dow, still got a bit of a way to go to that sort of levels, and this is Nasdaq, and look at it, sort of the extension higher, and then you go to S&Ps, and that's sort of like close. So everything seems to be saying something a little bit differently. You've got CAC still sort of 50% away from the it's only retraced 50% of this down move. FTSE the same, even less, and DAX is up there. So I know everything's got its different components and it's made up of different things, but I think there's a lot of sentiment involved as well. based on what's going on in the world with obviously the coronavirus and the economies. I think we acknowledge that we're now in recession, aren't we?
Yeah.
Today, this morning,
a big one.
we've just worked it out.
A big recession.
Was it 20% or something? GDP.
I didn't. Let's have a look. I didn't.
Can't remember.
I saw it flash. It flashed up on my phone.
Yeah.
20.4 minus 20.4.
That's the 3-month UK GDP. 3-month on 3 month. Year on year, we're down to 16.8%. Obviously, it's going to be a while before any
manufacturing steady at minus 14.6.
Yeah,
shocking, isn't it, really? But
so it just shows you the markets aren't really reflecting the economy.
I wonder if just come back to what you were saying earlier about banks and funds. I wonder if they're doing a lot, because we talked to a good friend of ours from Core Spreads yesterday, didn't we? And he was saying that London's a ghost town. And, everybody from RBS and a lot of Google, they've all been told that they will be working from home from now on.
Yeah.
So
it's definitely a sort of the impact. We haven't felt the impact on the economy yet, because we've sort of, like, especially in the UK, where we've had the furlough scheme, the government sort of bailing out all sorts of businesses which are zombie businesses. They're sort of effectively just delaying the inevitable. And when that the funding runs out, then we're sort of like we'll see the real picture. Unemployment.
And nobody can repay it, and then
exactly. It's sort of So it's they'll come up with some sort of magical recipe to sort of to save the day, I'm sure, or maybe not.
The PGs on those loans are only 20%, aren't they? Personal guarantees. So
on which loans?
On the government loans.
I didn't even think there was a
I think there's 20% PG on it.
All right, so they're going to get 20% back. It's because they're not going to. No one's going to be able to pay them back. I know a lot of businesses are just taking these loans and just working out a way of how they sort of get it from the business into their
Well, strangely enough, I talked to a car salesman last night.
Don't mention his name.
No, I won't mention his name. He can't get enough cars. And they're prestige cars. I mean, high-end smokers, and he can't get enough cars because he said that he's got so many people that have got this 50k off the government. They're all going out and buying motors with it.
Yeah, which is ridiculous, isn't it?
So
and you sort of
irresponsible.
Well, you got all the sort of like normal people who try and take advantage of the system will be taking advantage of the system. And they're going to be sort of like even more so now. So anyway, that's another story. Let's get back to the markets.
Let's have a look at gun to the head.
I think I just scraped a positive yesterday. Yes.
09R.
Right. I think you're probably generous on the closeout.
And I got stopped. Aggressively stopped, actually, for minus 1R. So again, we're not. Where's the little chart? There you go. We're flatlining at the moment. We're not going anywhere. We're having a bit of a holiday as far as the P&L is concerned. What are you looking at today, Stevie?
Well, I'm not going to look at copper, although this is a pretty interesting 4-hour bar. We've sort of completely engulfed. That closes at 10 o'clock, so that looks like a pretty positive start. This is on the back of indices. My favourite, obviously,
is the Nikkei.
I don't know. We've talked about this before. I don't know why that seems to perform just better. And holds the technical levels a little bit better. So last night,
from now on, I'm just going to put a couple of quid on and go to bed. To be honest, and not bother doing anything.
Not bother getting up in the morning. Well, we were looking. That was out of all the equity indices I looked at last night, and that's what I said. They're so different this morning. The Chinese, the Hang Seng, the Aussie 200, and the Nikkei. And we looked by 22,700. It got down to through to 22,700, and our stop was at 22,600 with a target of 23,000, and it's managed to hit that this morning. So a nice little technical bounce, and it's sort of pushed on as well from you know, it's sort of, we got going back to the June highs, then potentially we got back to, earlier in the year highs. So that sort of, as I said, seems to trade really well technically. Gone to the head this morning, all the equities are sort of starting to perk up a bit. And I really want to sort of fade them, because I think that you sort of get this sort of like midday time frame in the UK and Europe that seems to have a little bit of a turn. So it's trying to sort of estimate where that turn is, but on the gold, obviously we've had this 4-hour turnaround as well, a bullish engulfing candle. I'm looking at a sell a little bit higher up, 1950. You can see that there. But again, I don't really want to embarrass myself by being uber bullish on gold and silver over the medium term and then selling it in the short term and getting it completely wrong. I'd rather sell at the good risk reward levels that we've got on the intraday charts. So I'm just fumbling away, trying to sort of like think. Yeah, you go.
I should come to the rescue. Only because I've been sitting here just whirling it out all over in my head about gold and everything else, and I think I just got to go with this. This moves to the downside in the dollar DXY dollar index, which probably will mean that if I'm right, that is, it will mean that we could probably get a little correction higher in gold, but I'm gonna have to go. Oh, I've done it the wrong way around again. Short position, but I'm only going to go for that, and to get decent R, I'm going to have my stop there. So I'm getting short at 93.68. I'm targeting 93.08, and I've got a 20. That'll do. 24 tick stops and 93.92. So I've got a 2.5 hour risk reward trade. It's going to be volatile, I think.
You're selling dollar.
I'm selling the dollar index.
Okay, cool.
Hoping for that correction to the downside.
Yeah.
To then buy into, basically. I think it's going to be two-way traffic, but
yeah. Okay. That sort of makes me think a little bit more about. So let's get rid of this line. That's negated now. So yeah, just looking at the cable, I'm going to sort of like go with you on this dollar bearishness. I'm going to buy cable. Looking at the hourly chart, that we've had this nice bullish outside candle on the hourly chart. That's the sort of like inverted hammer. So that's the sort of, again, it would be really bullish if it was lower down, but and then a nice solid green candle in the last hour. So I'm going to, this is a nice, I think quite a nice risk reward. You can see this is this area between 129.82 and 130.20 has been a decent level to sort of like accumulate at. So I'm going to go and buy long, and I can have quite a nice tight stop on it as well. So I'll put the stop in at 30.10 because I mentioned 20 as the level. And I'm looking at getting long at what's it trading now? 134.52, is it? Or 130.51? 130.51. 130.51. I'll have the stop at 130.11, so a 40 tick stop, and I'll go for a nice 3-to-1 risk reward, move back up to 131.71. So getting long at 130.51, stop at 130.11, targeting 131.71. So that'll be, again, looking at a weaker dollar.
Lovely. I like it, obviously.
Yeah. I thought first of all I thought I was going to
get you.
Yeah. First of all I thought it was going against you, but then I worked out no, it's exactly the same trade. So we'll definitely get taken out badly. This is going to end in tears.
Double.
But that's what it looks like at this point in time. As I say, it sort of all seems to go a little bit funny around about midday. So we'll see.
Right. Good luck.
Cheers.
Right. News. Risk appetite was quite firm yesterday. This was on the back of Russian claims of a successful vaccine. And I did read this morning in the Bloomberg email that they're just going to start vaccinating everybody.
Oh, right, okay.
Even before the trials are over.
Nah.
So if you live in Russia,
Good luck with that.
I feel sorry for you, to be perfectly honest. So yes, no guinea pigs, just straight in for some vaccinations.
No time for testing.
What else was going on? We were talking about yield a minute ago, and I said, is the US 10-year yield hasn't gone anywhere, but I'm actually just reading in our report that it's actually on 4-week highs, so that could have maybe something to do with the turnaround in gold at the moment. Coming up, we've also had the UK GDP this morning, which was horrific, but as expected. Later on today, we've 1:30 UK, we've got US consumer prices. 3:30, we've got crude inventories, and then overnight, for all those lunatics that stay awake, Australian unemployment or employment report. So not a great deal going on, a bit of inflationary figures at lunchtime, and that's about it, I would have thought. Anything else to add, Stevie? Cool, you're on side already.
Hey, take your profit.
Yeah.
Not really a lot. It's I've got just a sort of like story going on between Venezuela and China. That Venezuela have lost 3 oil super tankers to its Chinese partner. So there's a shipping joint venture between a group from Venezuela and China. It's fallen apart in the wake of the US sanctions, resulting in the South American nation losing 3 super tankers at a time when foreign shippers are reluctant to carry its oil. So PetroChina is just like state-run thing, and yeah, so not very nice things going on out there in the world, is there?
No.
US crude output drop in 2020 to be steeper than last forecast. That's from the EIA, the Energy Information Administration, the US body.
Yeah.
Not really a lot more. Yeah, no, that's probably about it.
Lovely. Okay, let's call it a day.
Yeah, brilliant.
Good luck out there, and we'll be back again tomorrow.
Cheers.
Thanks. Cheers.